What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see the Dow Jones showing some strength. We see the S&P 500 continuing to close at all-time highs, and we do see the tech sector taking a second to cool off. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we did close up 0.08% higher for the day, and that's yet another closing all-time high. We also hit an intraday all-time high just below 429. So that's the third day in a row that we're closing over 427, which just increases the probability that we're getting to our next price target at 430. So continue to watch 430 for the next price target, with support levels down here at 427, 425, the gap close at 424, and that 20 simple moving average just above 423. Remember that the 20 simple moving average is a critical level of support and it continues to go higher day after day. Soon that 20 simple moving average will be crossing through the gap at 424 as this market continues to push higher. So the price action and the trend on SPY are still bullish, and we still want to remain bullish at this time. We do see increasing volume today, which is a bullish indication, and we still have a ton of short sellers in the S&P 500. So remember, there's still this possibility that we do get a blow off top and we blast right through 430 and go parabolic. If we get a mixture of FOMO buying in at the top at the same exact time that we trigger a short squeeze, we will very likely see a blow off top to brand new all-time highs before a massive sell-off. So this isn't the best time to be shorting the market because this market is bullish and you never want to short a bull market. It's like trying to call a top and you never know exactly where the top in a bull market is going to be. So just don't even bother trying to short this market, and if you're getting scared and you want to get defensive, just go to cash and wait it out. However, in a bull market, I always suggest leaving some amount of money in the market because you never know exactly how high it's going to go. If you do go to 100% cash, you're more than likely going to FOMO in a lot higher later on. So you're better off just leaving a long position running while you continue to get more defensive. As you can tell, there's a ton of support below this price action, and we can still maintain the bull rally and the bullish trend even with a pullback all the way back down to about 424. So watch that increasing volume because that is a bullish indication if we continue to go higher on increasing volume. Remember, we take the stairs up and the elevator down, so we can always continue to go higher on lower volume, and we usually will see selling on higher volume. So don't necessarily look at lower volume as a bearish indication. That's a very rookie mistake because there's plenty of times in the market where we continue to go higher on low volume. Remember, markets go higher when there's no big money sellers. It doesn't matter if there's a lot of volume because you can go higher on low volume, because if there's no big money sellers, the market very likely is just going to continue to melt up higher. So don't be tricked by the volume because as you can see, that volume is now coming in. And if you let this volume scare you out of the market, you're still missing the rest of this move up to 430. Now keep in mind the S&P 500 is going to 430, but a lot of the stocks in the S&P 500 are going much higher. So as long as we have a bullish S&P 500 and a bullish Nasdaq100, there is still plenty of great trade opportunities in stocks across the market. If you're on the Stocks Channel Discord, you know that we've been crushing this market with our trade ideas, and we continue to find stocks that continue to run. So don't necessarily think just because the indices are bullish that you have to trade the indices. There's still plenty of other stocks out there that are lagging behind and still haven't had those monster moves yet. On the Nasdaq100, we dropped a little bit today, going down only 0.16%, and we're still above that critical price target at 353. So that's now 3 days in a row closing above that price target, which does further validate that we are going to the next price target above at 359. Above 359, we'll be looking for 361. I said this time and time again this week that this is one of the most bullish rallies you're ever going to see in the triple Qs. Looking at these moving averages, they are very strongly in trend mode and they are extremely bullish. There's great separation between the moving averages and they're all very aggressively sloping to the up direction. That's going to continue to offer plenty of support to push the price action to brand new all-time highs, and we won't see this bull market dying easily. When you get a bull trend this strong, it's very hard to see the trend die. You're going to see tons of buyers of the dip when you have a very strong bull trend, and that's why when you're in a bull market, you want to buy the dip on great stocks. So as you can tell from the Nasdaq100, we still have extremely bullish price action and extremely bullish trending. Your critical support level is down here right around 344, which is that 20 simple moving average, and we still do have support just above that at 346. On the Dow Jones, we did see that bullish bounce today going up 0.6%. I was just saying this last night that if we can see strength returning to the Dow Jones, that will increase the probability that we see a bullish rally in the summer. Remember, we want to see all of these indices looking bullish and not just SPY and the Nasdaq100. We want to see the Dow Jones and the Russell 2000 joining the bullish party, and it does look like we're starting to see that. The price action is back over the 20 simple moving average basically for the 4th day in a row, because if you take out the dividend payment on the Diamond ETF, we did have the Dow Jones index closing above the 20 simple moving average. So we're very close to having that full bull trend. We just need this 13 EMA to cross back above 343, and it's game on for the bulls in the Dow Jones. So upside resistance levels are going to be right around 345, 348, and 350. Downside support is now 343, 341.7, and that 50 EMA, which is right around that gap close at 340. So far the Dow Jones is looking a lot more bullish because the price action continues to close back over this 20 simple moving average. On the Russell 2000, we were flat for the day, closing just barely above that 20 simple moving average, and we did find resistance right at that $230 resistance level. Look for the Russell 2000 to try to regain that bull trend and break through resistance at 230 and retry the attempt to break out of 233. Above 233, we have resistance at 234 and then brand new all-time highs at 237. Downside support is right around 229, 227, and the 50 EMA at 226. On the Arkk ETF, we were flat for the day, basically going nowhere, going down about 0.08% and closing right on top of that support level at 130.5. Arkk has had very bullish price action and it now has the full bull trend, so I am expecting to see Arkk continue to run going in through the summer bull rally. We still have a gap to fill down here at 126.5, but there's no guarantee exactly when that gap is going to get filled. So look for downside support levels right around 128, 126.5, and our support trend line right around 123. Our 20 simple moving average is very close to crossing back above our support level at 120, so watch that support level as well. On the VIX, we were down over 1% today, and the VIX did try to break out above our 16.6 resistance level. We saw the VIX getting crushed back below that level, and we continue to see a low VIX, which means low fear. Remember, this is a bullish VIX because the VIX is a measurement of fear, and we continue to see the VIX closing below 16. So this does go hand in hand with the bull market rally that I'm expecting to see in July, and it does look like we're going to see very normal volatility spurts, but nothing out of the ordinary. If we do start seeing the VIX getting back over 18 and 20, that will signal a deeper stock market correction, but right now we're just not seeing that, and the VIX is telling us to remain bullish. On the US dollar, we did see a spike off of that consolidation above the 5 EMA, but it does look like we're finding resistance right around that previous high. Remember, if the dollar continues to break out and holds this bullish trend, that should put downward pressure on gold and silver. So if you're trading gold and silver, you need to continue to watch the dollar here. On gold, we did bounce off that support level today at 1761, but we failed to break above the resistance at 1776. If we break below this support level at 1761, our next support level is all the way down here at 1686. Upside resistance will be 1776, 1818, and 1829. On silver, we also bounced off of our support level today at 25.78, and we're back over the 5 EMA. Look for support down here at 25.78, and if we break below that, we're looking for support at 25.1. Upside resistance levels will be 26.5 and 26.7. On Bitcoin, we're currently down around 3%, and we're holding up just above that 5 EMA. We're back below the 20 simple moving average, but we're still above that critical support level at 30,000. Remember that I'm bullish on Bitcoin above 30,000, and it's as simple as that. We don't have a bullish trend, but we do have that bullish price action of that double bottom look. So as long as Bitcoin's over 30,000, I'm looking to see if it can break over that resistance level at 39,000. If Bitcoin breaks back below 30K, look for support at 27K and 23K. If we get back over 39,000, that will make me a lot more bullish, and it will mean that Bitcoin could likely see a summer bull rally. So look for resistance at 39,000, and above that we'll have resistance at 43,000, with our downside support levels right around 35,000 and the breakout level right around 33,000. On Amazon, we dropped about 0.25% today, but we're still above that support level at 34.30. If we stay above this support level, Amazon can continue to run to a brand new all-time high. So we still have the full bull trend, and we're coming off of a nice dip here, so this could be a nice buying opportunity off of 34.30 or 3400. The 20 simple moving average is coming up higher to push the price action soon, and that should push Amazon above 3,500 and get to our price target at 35.52. On Tesla, we're still holding the breakout level ever since we broke out of our resistance trend line right around $670. We closed today right around $679, and we're holding up in this sort of bull flag look, and we're consolidating and forming a wedge, and we're about to see Tesla make a big move in one of these directions. To the downside, I'll be looking for the gap fill at 659, and to the upside, I'll be looking for a break of 692, and then look for Tesla to possibly run to 715, break that, and get into the 760s. Now we need to be patient because we still have this gap below at 659, and if that gap level fails to hold that support, we could be coming back down to about 642. So look for your upside resistance breakout at 692 and your downside support breakout right around 675. On Apple stock, we were almost up at 0.5% today, and we did get to our price target at 137.4. If Apple can break above this price target, we could start running into the 140s and we could see Apple at brand new all-time highs. We see Apple's in a very strong bull trend and we continue to blast through resistance levels. Look for support at 135, our 13 EMA right around 133, and our support level breakout right around 132. On the financial sector, we were up 0.44% today and we're back over that 50 EMA. Again, if we see the financials and the industrials regaining strength at the same exact time that we're seeing strength in the tech sector, that's only going to help push the S&P 500 higher. On the industrials, we had a bullish day today, going up 0.78% and closing back over the 50 EMA. We still would like to see the industrials getting back over that 20 simple moving average and regaining a bullish trend. This strength in the industrials will help the S&P 500 continue to push higher to all-time highs. On the healthcare sector, we dropped 0.06%, still closing over the 5 EMA and still holding on to the strong bullish trend. On the energy sector, we bounced today, going up 1.24%. And it does look like we're going to continue to try to find support just above this 50 EMA. Look for the energy sector to either retest the 50 EMA support or try to break back above that 20 simple moving average. So jumping back over to the S&P 500, we can definitely see strength coming back to the financials and the industrials. Remember, if we see the financials, the industrials, and the tech sector all showing strength at the same exact time, that's going to be extremely bullish for the S&P 500. We're going into the month of July, which is typically a very bullish month, at the same exact time that we're seeing strength returning to the financials and the industrials. The tech sector and the healthcare sector are already very strong, and I already showed you how strong the bullish trend is on the Nasdaq100 triple Qs. So when you get a very strong bullish trend like that, I can't stress it enough that the trend is your friend. You don't have to trade the indices right now, but while the indices are bullish, go take advantage of a lot of these great trades which are going on across the market. Remember, on the Stocks Channel Discord, I'm bringing plenty of brand new trade ideas to help you crush this market. I'm also doing intraday updates and analysis to always help you navigate this market and stay on the right side of the trade. Remember that you always want to be a bull in a bull market, and there's no reason to turn bearish and try to call a top. I can't stress that enough, that short selling is very difficult to do, and only the best traders in the world can really pull it off. So don't bother trying to short a bull market, stay on the right side of the trade, and you'll do much better in this market. Also, don't forget that I did launch my trade alert service that only trades the TQQQs, and it's called BANC Trade Alerts. It's a very simple system to follow, and it sends you all of your buy and sell alerts via email and text message. You can find out all of the details about the BANC Trade Alert system below, and I'm also running a 50% off promo coupon code for your first month so that you can get 50% off if you want to try out the BANC system. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.